Guys, welcome back to another video. Today we're going to be just running over GBPUSD, that buy that we caught today. Absolutely banging the market. I'm going to explain exactly the reason why I took this trade, the idea behind it, how I manage it, how I execute it, and basically identifying the market as well, because that's vitally important when you're stepping into this game and when you're wanting to take a position. You don't want to just be entering a position for no absolute reason. You want to be making sure that you are taking trades with confluences and an execution model. And this is what we're following today. As you've seen, if you guys are in our premium team, and one of our students, you'll realize we're using the same framework over and over and over again, be able to take these positions. So ideally, what I started off with in the pre-market was I marked out my previous day high, my overnight low, and my previous day low. This GBP USD was a bit tricky simply because yesterday there was FOMC, and ideally the market, yes, closed off bearish because of the market open. It closed off bearish. You would consider this a bearish trade. But ideally, the New York session coming into yesterday did correct itself all the way back to the top. So it is a bit of a mix and match, bias at the moment. But ideally, we were trying to follow flows. And as you can see, coming into Asian session, we saw there was a lot of pressure to the downside, right? And we were closer to overnight low than overnight high at that position that we're watching out. So ideally, we're trying to mark out our value area and as well as align ourselves with EMA. So the value area identified was this area over here, which also aligned with EMA. So the idea behind this position would be price to pull back up into EMA, into value, and start pressing low after sweeping overnight low and continue to the downside. Ideally, this is what we were looking for. This aligns with our plan because it's following flows here. Yes, ideally following previous day flows as well. But again, mix and match buys because we had a lot of bullish pressure coming into New York session yesterday. We did crack below the EMA on the 10 minute. And so this was, again, just lining ourselves with EMA, lining ourselves with flow and a value area as well. So as we can see, prices opened up. We have not executed our position as of yet because this is pre-market. Again, setting up a pre-market analysis is the right thing to do, because if you're just trying to trade off as market opens, I mean, you would like to have an idea before entering positions. You would like to have an idea before going into the market, because things can shift very, very quickly. And if you're looking for buys here, this thing could have reversed. So ideally, what we were looking at is waiting for that EMA touch. This was the first position we took. We did take a small loss. It tapped. This was an aggressive entry model. I was up on the week, so I was willing to put a bit of risk on it. I was risking 0.20% of my original risk, which would be 1%. So it took $100 loss here, which is not bad at all. I was still managing my risk at the end of the day. We could see that price was heavily pushing to the top side. And I mean, it did, again, all our confluences was there. It was just that one negative confluence of yesterday being a bit of a mixed match kind of day, selling off and buying up as well. So cool. We scratched that idea. We took a loss on it, which was perfectly fine. Didn't bother us. And again, market open just arose at that time. So there was still room for the trade idea or trade ideas to develop. So we wanted to see how price was going to react. So ideally, we dropped down to the 5 minute. We could see that price was heavily bullish. One thing I identified was we had a break. We had the EMA break and a value area also created. If we could see that on the 5 minute there, we marked out a value area that also aligned with EMA just because overall flows were bullish all of a sudden. I wanted to align ourselves with, as day traders, we can't be fixed on a simple bias. We must be able to switch, especially if we're in the lower time frame market. Yes, if you're in the high time frames, it is something that you can, stick to. But ideally, with the market also being so consolidating, I mean, it's been up by selling, buying. Ideally, we want to be in and out of the market as quick as possible and easily be able to switch your bias. And coming into this market, again, taking that first loss, which didn't affect us at all, and then setting up for GU longs, which looked pretty good as well. So ideally, again, lining ourselves with EMA and lining ourselves with value area, and overnight high has not been swept yet. So let's just see how price developed. It went quite aggressive. So we're waiting for that pullback. Again, we are looking for extensions and corrections in order to get to the market to travel further up. So that's what we were aiming for. So ideally, our long position would have been set at this, with leaving our stop loss below the low and marking out, aiming for the overnight high once again, because we could see clearly that there was a lot of bearish pressure coming off overnight high and previous day high as well. So we're just keeping wary of that, which left us to a 1 to 5 almost when hitting this target, leaving a stop loss just below that value area. Let's just see how price played out. We could see we could get some nice bearish volume coming into the market. Ideally, I did not enter straight off the tap. We did not enter straight off the tap because we wanted a bit more confirmation coming into the market, especially because of the first loss. So we wanted to be conservative. What I did then is I dropped down to the 3-minute, and again, obviously with the bar replay tool, we could see that the next tap happened over here. So we could see that there was rejection in the market. We could see it was starting to hold our value area, hold our EMA level. So we entered our position on that 3, putting a stop loss just below the low, and we could see that left us to a 3.5 risk to reward. Again, if we jump back to the 5, just aligning ourselves again. As you can see, that second tap didn't happen. The second tap did happen over there. And boom, tapped in. We had a beautiful bullish engulfing off that second tap. If we jump down to the 3-minute again, we had a beautiful rejection. Then the 3-minute opening up again, another bullish engulfing. And then thirdly, the 1045 bullish engulfing, absolutely ripped to the top side. Taking up profits, hit a $400, $500 trade on this. So ideally leaving $350 on the profit for the $400 on the table today, which was what we kind of aiming for. Yes, we could have extended it and expected price to go further up, but I mean, just because of the first loss, and we've had a pretty good day in the market this week, I just wanted to be a bit more conservative as well coming into this position here. And as we can see, the 3-minute and the 5-minute actually showed rejection at this area. So I took out around about there, just at that point, which led us to a 1 to 3.38 risk to reward, which is absolutely beautiful. And then again, the uncertainty of the market buying up and down. DXY, if we checked out the news, it was bouncing. It wasn't having a lot of direction as well. So we just, again, being conservative in managing our positions as well quickly. And then just to show you how the rest of the trade played out, it actually ran further. If we held our position a bit longer, we would have been stopped out at break even or stop loss at that position there and ran further down, trying to aim for those overnight lows. Because it was rejection at the overnight high previously at this point here, we expect that price to just push up again, take our profits, and basically be done for the day. Again, just to recap, we are aligning ourselves with flows and value in EMA, gathering our confluences, and ideally we could have even considered this a bullish day. Yes, it closed bearish, but it could have been bullish because of that correction in New York, which helped me just align myself a little bit better off the 10 o'clock open, showing that there's a lot of bullish pressure in the market, pulling back into EMA, pulling back into value area, and then hitting our TP at the top there, which I was clearly and happy to be done for the day at that time, hitting a $400 profit for the day, which is about 8-9 grand. Yesterday we also had a banger of a trade, hitting $950 for the day. So I mean, ideally this week I've already been up $1,700 or $1,800 for the week. So I'm perfectly fine to cut my trade short, gather my profits, and get out the markets as soon as possible. Hope you guys learned something. Peace out.